This is Sam Putnam.
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 This stock will shock everyone within 90 days. The stock is Netflix, ticker symbol NFLX. You know it. You love it. You know Spotify. Spotify is also in a good spot right now to break out. These stocks tend to move in unison because they both are based on consumers wanting to chill out and pay for entertainment. America has the biggest entertainment appetite in the world, and these stocks, Netflix in particular, is ready to go as of today. Let's take a look at the chart right now and make sure we're at a good spot here. So here's the chart. If we zoom out a little bit, we can see that we're going sideways here. Absolutely. And this is a long time to build a base, okay? This is more like 4 or 5 months at this point. Stock only moves 2% a day. So on a broader level, as we look at the market itself, this is a pretty insane run. We never want to bet against the market, but we are up 30% just since the beginning of September, okay? So could we go higher? Of course we could, but there's a reason I'm highlighting a slower moving stock right now. Super safe. A lot of sectors have gone. Quantum, absolutely insane run. Nuclear, absolutely insane run. Uranium, which is a subset of nuclear, absolutely insane run. And just today, drones, absolutely insane. Okay? So with all of these sectors having exploded, sometimes you need to digest for a bit, and I think there's no better way to park some money, in my opinion, than in a company that has been basing for months, did sell off on Q2 earnings like a lot of companies, and now is holding. And its partner, Spotify, also looks like it's in a great spot to shock everyone and start to move up despite what happened after Q2 earnings. So let's jump into a little bit of info about what Netflix is doing besides just everything we know and love about the company. This is the concerns, okay? Are people gonna not want to pay for streaming if they don't have money and if they're worried about the rest of the economy cratering? And that was kind of experienced briefly, but Netflix came back over its high since the tariff introduction way faster than the rest of the market. This is mid-April. The market didn't reach all-time highs until all the way in June. So, and that's higher than some of the other companies that were pretty powerful. Palantir got there in mid-May. That's about the soonest I can think of a stock reclaiming. If we look at some companies like Tesla, of course, being the case on the other side, which is still not there, despite this huge breakout in the past couple weeks. So this thing can really move as soon as there's news that, you know, things are okay. And it has shown relative weakness to the market so far, but we just got this rate cut, and it was expected, but it does seem to be holding okay, as well as the market holding okay. More importantly than all of that, and I promise this will be the last piece of info I drop about this chart before I jump back into the value head stuff, is this is a really clear level, somewhere around, 1200 is the whole dollar level. But the larger point is just that if this does go down, not a lot, 3%, you're all the way down basically at these lows, which match lows from nearly all the way back in August and then down here back in June. So there's low risk with opportunity upside. It's super safe. Okay, the stock isn't going to make you go bankrupt unless you lose your iPhone for months. Here's the deal. I don't know that you need to focus too much about particular analyst ratings, okay? We never really focus on them unless they're from a bank like, Goldman Sachs or something like that, which there was an instance as well. CrowdStrike had a just smorgasbord of analyst ratings in the past couple of weeks that coincided with this move. So there are occasionally, this is mid of September, in situations where analyst ratings do matter, but particularly with tiny companies. But this is a large company where there was a bunch of analyst ratings that came out and the stock skyrocketed. So I'm not totally going to say analysts' comments are useless. I mean, I'm basically cosplaying as an analyst here. Okay, this is not financial advice, though. I'm just a YouTuber. Here's the point, guys. This is the spot, and as far as information about the actual situation for Netflix, yes, this is somewhat interesting, if only because it involves beer. Movies are always fun to talk about, but they're not really needle moving. Okay, this is great. This is cross Atlantic. That's great. But look, I think more importantly is, the nitty gritty finance stuff, okay, which is boring. But Amazon Prime and Disney Plus are offering bundled subscriptions. Peacock is also a competitor. Netflix has been experimenting with ads as an example of a tier. But this is sort of the gargantuan elephant in the room. Spotify has rolled out video for their podcasts, clips as well, which somehow compete with YouTube in a way. So is it insane to think that Spotify could be on your TV? Probably not, actually. YouTube actually is more streamed on TVs than anywhere else. Now, I don't know that we have to worry about sort of other big companies when we're talking about Netflix market cap wise, just because in terms of companies this big that occupy this space, it's really not relevant to talk about the Nvidias, the Exxon Mobils. It's really just Disney, and you can see there's nothing that interesting about Disney because it's just been going sideways for years. Okay, so when someone talks about doing some type of value investment in a blue chip stock, just humble them and have them grab a chart and show you, that it's made a move in the last year or two. So that's why we're looking at Netflix. I'm not knocking stocks like ExxonMobil, but it's another example of, look, this is a type of move that will just make you rich in 50 to 60 years, okay? So Netflix is the stock idea for today. I did give the levels for that one and expressing some caution regarding moving into speculative stocks. We did see Open Door selling off significantly. Those rare metals stocks, though, still do look strong. MP is an example of doing just fine. And of course, I talked about all the other sectors, quantum having already gone, nuclear having already gone, uranium having already gone. So I don't know that you really want to focus on little companies, hence this informational on Netflix. If you like these ideas, if you like finding stocks where you can get in with limited risk and have a large upside, if you want to beat the market, actually, I'm not a financial advisor, but I can connect you with a community at stockscommunity.com that is growing. We can talk there for $25 for 7 days. Could be worth it. $25, what's that? Couple pizzas. Head over there, give it a shot. And if you haven't hit that subscribe button yet, hit that. You'll get notified when I drop a quick video, and I will see you in the next one.
This is Sam Putnam.
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 This is Sam Putnam.